Welcome back to the show. Let's focus on the deal street, and Grant Thornton Bharat has come out with its monthly report in which the month of November has seen a huge surge in the M&A activity. But if we really look at the deal flow year on year YTD, then there is a very big dip that is seen. Of course, 2023 has been on a slow lane when it comes to the deal street. Raja Lahiri of Grant Thornton Bharat joins us now to give us more details and sense on the deal street. Raja, always a pleasure welcoming you on CNBC TV18. My first question, in this particular month, of course, in November, one particular deal really ramped up the number. But overall, there has been a significant slowdown in this particular year. How do you see 2024? We are in the last month of this year.
Yeah, I think you're right, Nisha. I think we've definitely seen a knock on the deal activity this year. And let's not forget that 2022 was pretty much a breakout year. There were lots of deals that happened, private equity, venture capital. We had some $2 billion deals that happened. Of course, the knock was felt in 23, largely because of, one, I would say the overall macro environment globally that persisted. Second was the venture capital private equity that came down, and of course the inbound. So that's what obviously explains the kind of decline. But having said that, I think we are, in my view, we are going into a very, very solid period of deal making in 24. That's my view. I think why? What are the 2-3 factors? I think one is elections are coming in. That's number one. So there is, of course, there is going to be that slowness, cautiousness, etc. That is going to happen till March next year. But so one is the overall kind of, I would say, the force of the government to look at India as a destination for investments, deal making. I think that is standing out pretty much. Every investor that we talk to, every large company that we talk to outside India, they are looking India as a top destination. So I think that's a very fundamental opportunity that we have from deal making. So that's number one. So that's a macro is positive for us. Second, I think the deal making is transitioning to very much to the upcoming new sectors, right? What are the new sectors that I view possibilities of deal making? I think first is the energy transition, right? Climate change, energy transition is no more a good to have, it's a must have. So the push to EV, push to renewables, all of that.
So the sectors of the future, you are saying, are going to see much more traction. And that has been the case in terms of investments this year as well. What happened to private equity? That slowed down. But in one area, that is in the exits through block deals, they have done tremendously well in this particular year. How are they poised for next year, sans the risk factor of elections that you mentioned?
Yeah, if you look at private equity, I think it's been a pretty good year in private equity. I'm just segregating between private equity and venture capital. Private equity, if you look at it, 2 large deals happened. Hospitals, right? Temasek in Manipal, as well as Blackstone acquiring care hospitals. So private equity continues to change to shifting the gears to large buyout deals, right? So I think that's a space to watch out for. And there is a phenomenal amount of fund. The large bulge bracket funds are deploying for India. So watch out for the bulge bracket funds deploying buyout deals. So that's one. So I still feel bullish. Where it has slowed down, I think, is the mid-market private equity growth capital deals, right? That's where we've seen some slowdown. Because why? Because we are seeing the shift from the traditional sectors to the new emerging sectors. So people are trying to grapple, where is my next kind of return is going to come from. So that's where I think explains the little bit of slowdown in the mid-market. And the third is venture capital clearly has slowed down, right? From $7 billion last year to $2 billion this year. I think that is following a very much clearly a global trend because people want good models and profitable models. So I think startups will face some challenges.
Yes.
So I think that's kind of explains the private equity venture capital.
All right. And my final question, and a quick answer expected on that one, Raja, about the capital market action that has been robust this year. An equity market window has been capitalized by the investor community, especially in exits through IPOs as well. How's the IPO pipeline looking for next year as of now?
The short answer, it is tremendously inspiring. So that is one. And I said that before. I believe that this decade is going to be IPOs for India. So tremendously exciting times ahead of us. A lot of companies are coming to many firms to preparing themselves for IPO.
Right.
We saw Tata Tech clearly, but I feel this is a lot of activity waiting to explode in 24.
All right. So a lot of deal flow expected. Deal activity is likely to be robust in 2024, minus, of course, the risk factor or the uncertain factor about the elections. And that is one factor to be watched out for. Raja Lahiri, thanks so much for all your perspective on Deal Street on CNBC TV 18. With that, we'll slip into a short breather.